Hi, welcome to Simple Wealth Wisdom Podcast. I'm your host, Sim Gakhar. Each week, we bring successful business owners and professionals simple financial security ideas to help them build and maintain their lifestyle and legacy. So, look for tax, accounting, legal, estate, and investment advice that you can use to protect and grow your wealth. Today, we welcome Rosemary Connolly of RBC Dominion Securities to talk about investments. As an investment advisor with RBC Dominion Securities, Rosemary provides access to a comprehensive range of services to help business owners and self employed professionals build and protect their wealth. Her breadth of experience, expertise, and credentials help and ensure that builds sound advice and expert execution and peace of mind for business owners and self-employed professionals. Of course, the clients who need solutions for both broad and complex wealth management needs. Rosemary is passionate about building long-term relationships with her clients, and she enjoys watching their success as they achieve their financial goals. So now I welcome Rosemary. Thank you for joining me, Rosemary, and really appreciate you taking this time and coming here to help self-employed professionals and business owners. And a lot of people can relate to it. As a self-employed professional myself, I really feel that there are so many questions going on in my head that need to be answered, and no one has talked about it. And in my everyday life, I'm so busy that I feel someone needs to answer. So I think it'll be a great time for everyone to listen to you today.
Yeah, I think that's great, Sim, and it's so true. Everyone's very busy in their everyday life, and your business or your profession is usually kind of comes first, or your family, and some of these things kind of go to the wayside sometimes. So I think it's great that we're here today talking about it.
Wonderful. And business owners, professionals, they're busy making money. That's their baby, and the baby is growing, and they're busy making money. They are thinking about making more, doing well, growing their practice, but the money that is sitting there in the corporation, money that they've made, how about investing that to bring that passive income for them? So that's what I really wanted. Your wisdom, I would like you to share that how and what are the investment options for self-employed professionals and business owners?
Yeah, for sure. So in terms of investment options, self-employed professionals or business owners have kind of the same options that are available to most clients out there. So it does depend, I guess, on the firm you're dealing with, but if you go to a bigger wealth management firm, they should have access to anything out there that's basically traded on any public exchange. So a full kind of shelf of wealth management products. So that could be stocks, bonds, GICs, mutual funds, ETFs. Private alternative investments are also becoming quite popular as people try to find different solutions that may not be correlated to their equity investments or bonds. So something a little bit different just to diversify. But I do think, especially for business owners, what makes the most sense is really building a portfolio of individual stocks, bonds, GICs. It does give you just a little bit more control for things like dividend income or taxes that you might be realizing at different points over your investment term.
Wonderful. And I know a lot of these words might be, what are ETFs? What are stocks? What are bonds? What are mutual funds? How do I invest in that? These questions, are a lot of time people don't know, because you know what you do and nobody can know everything. And these questions always come up. So is there anything else in terms of investments that one should be considering when they go to see a wealth investment professional or a wealth advisor? Because walking to a bank and saying, I've got this much money, I want to invest, and then next time you go into the bank, that person is not there.
Yes.
And then the next time the person is moved to another branch or is doing something else. And you think, okay, that person told me this. So I just want to know, coming from this far, what do you think should be something that everyone should know?
Yeah, I think that scenario that you just painted, I mean, it happens all the time. And often when people are starting out, you go to your local bank branch, you go to the investment firm down the street, and there is a lot of turnover. But what I always recommend is if you're at a point where you've built up some wealth, and you're looking to invest it, I think what you really want to do is start a long-term relationship with someone that you trust. So not someone, you're having to re-explain your situation every few months when you inevitably get a new advisor, but someone who's going to be around for a long time, who's going to kind of see you through your career and your retirement. And aside from the investments, I think the industry has changed a little bit. I think there's a lot more that people are looking at these days. I think financial planning is really important. Looking at your estate, looking at your taxes, that's a huge one, especially for business owners. And just having more of a holistic view of your wealth. So it's great to have an investment account and, have a return expectation, but there's so much more that kind of goes along with that.
Wow, I loved it how you said building relationship. You don't change your accountants every day. You don't go to one accounting firm and next day you go to another accounting firm. You want to have one accountant. You want to have one doctor. The doctor knows your history. A professional like wealth advisor is something like that. You don't want to go to another person each time. Yeah. Your doctor knows your history. Doctor knows what suits you. Your accountant knows all your books. Same way a wealth advisor knows your risk profile, knows exactly what you are comfortable with. What kind of investments are you comfortable with? How you would like to see your growth. So I think that's a great thing. Building a relationship is something great that you said. So now that comes to a good planning piece.
Yeah.
And planning means a financial planning. And now, Rosemary, I would like you to tell everyone what is financial plan and why having a financial plan is so important.
Yeah, so I mean, in my opinion, a financial plan really allows you to bring meaning to your investments. It kind of gives you a little bit of direction. In that process, what we do is sit down with the client. We're going to go over your individual situation, your family, your income, your tax situation, what's important to you, and any goals or constraints you kind of have for the future. And all of your assets are going to come into that plan. So it could be real estate, could be a corporation, could be RSPs, TFSAs, whatever it is. That's all going to come into one document. We're going to make some assumptions and do some projections, but it really allows you to see how that wealth could grow over time. And I think the tax part is probably what most people are concerned about. And just seeing ahead of time what might happen with your corporation or your real estate, and really building a plan. Maybe you want to retire and you want to talk about strategies for removing that income later from the corporation. It's a lot easier to plan for that ahead of time. And there's certain strategies out there you just can't do at certain points in life. So the sooner you plan for those things, the better. And it also kind of gives us a benchmark for the investments. We bring that plan out every year during your annual review, just to make sure you're on track. If there's a shortfall somewhere, why is that happening? And then also just to kind of look at your situation and say, have things changed? Have my priorities changed? Have my goals changed? And update that plan as we go.
That's wonderful. So financial plans are very important.
It is.
And financial plans don't only talk about today. They talk about growing your wealth. They talk about how you're going to use this money in your retirement. So you can do the full planning. Isn't that amazing?
Exactly.
But a lot of time, when you're self-employed, you're your own boss. You're working. And you're only working. and you forget about planning. So financial plan is a big piece. Thank you for sharing that. I love that. Now again, you know that I am fan of business owners and self-employed professionals, and most of my questions move around them. So my question is that I would like to ask, are they able to invest in their corporation? Somebody has retained earnings. Do you think they should take that money out and invest, or can they invest in their corporation? And if yes, how does that work?
Yeah, so these days for business owners, investing in your corporation is actually very simple. And it's what we would always recommend, I think, for most people, having the ability to not draw a ton of money out of the corporation because you're paying personal tax.
Absolutely.
Is a huge advantage. So all we would really do is, open an account in the name of your corporation, and you can do that with any wealth professional. So you would just open an investment account, and the funds that may be in your corporate bank account, as long as they're not actually changing names, there are no tax consequences. So it will allow you to move funds into that account, and then you would invest, just as you would in any other account. Any of the gains or the income will be taxed at your corporate tax rate. So obviously much lower. It's a huge advantage to kind of grow that wealth over time inside the corporation, and then into retirement, you'll look at strategies to take that money out of the corporation and fund your lifestyle.
That's wonderful. And when you're taking out the money in the retirement again, you are saving tax because you had paid less tax. The money was in the corporation. You never took it out, so you never paid full tax, personal tax rate. So wonderful, amazing. This is something that you all should know. This is something we all should know. When we're making money, what can we do to save that money? What can we do to grow that money? What can we do to keep more of wealth with ourselves? And that's something, Rosemary, I really think that was a great answer. Yeah. Wonderful, wonderful. You've shared so much knowledge with us today, and now I would like to ask you, in fact, I would like you to share with everyone what is the best way, or what is the simplest process that a business owner or a self-employed professional should expect. As you know, as I always say, they're very busy taking care of their baby who's always growing. This baby is never going to be an adult baby. There's going to be always a growing baby because their business, it's their business. So what do you think they should expect as a process? What do you think?
Yeah,
the simplest way.
I think it's everything we spoke about today, really. I do think what it comes down to is finding that person that you're willing to trust so that you can kind of take a step back and worry about all the things in your life, like your business. So again, finding that professional that you can start a relationship with so you don't need to worry about that side. And I really, really strongly believe that the planning piece is important. So starting that process with the financial plan. And then from there, you'll have a really clear picture of where you stand currently financially and what could happen in the future. And from there, your advisor should be making investment recommendations that are customized to you and your specific situation. So I think that process is really important. So planning first, investments around the plan, and then obviously ongoing maintenance as the market conditions change, but also as your life changes.
Wonderful. So financial plans are very important, and you should definitely have a financial advisor who can take care of all this. But I'm going to ask you one more question. Yeah. How often should a financial advisor, their wealth advisor, should contact, because business owners don't have that much of time. Yeah. They can't just be sitting and saying, okay, my investment was here, it's grown here. No, they have their business which needs more time. So what do you think, how often they should touch each other to review? What do you think should be the time?
Yeah, I think at a minimum annually. I do think every person kind of has a different comfort level and wants a different amount of touch. So again, finding that person that's willing to work with you and where your comfort level lies. There are several different kind of models out there. So you might work with someone who wants a lot of involvement, or there's other clients that are fairly hands off. So again, it's going to depend on the person. But I would say you should be reviewing your investment plan and your financial plan minimum annually. And obviously, if something big happens in the markets, you should be having touch points at those times as well, just to kind of, help coach you through some of those things that can be a little bit difficult when the markets get rocky.
Absolutely. That's wonderful. Actually, I think it's a great idea. But you know what? Somebody like me,
Yeah.
I like to have things in my control. I like to have things where I have access to everything anytime. If any opportunity comes, I want access to my funds. And I'm sure business owners, they're looking for business opportunities. They want to invest in their business, so they want their money to be close to them. They want it to be accessible. So what do you think about that? When they want funds to be that accessible, as well as they want funds to be invested also, that in case they don't need it, it's growing. What do you suggest? I think that's the question a lot of people want to know.
Yeah, so there's a few different things you can do to kind of deal with those situations. And at the end of the day, it really comes down to, how much wealth you have invested and how much you might want liquid. And these are why you have these conversations when you start with an investment professional, just so they can kind of get to know where your head's at. But sometimes what I recommend is just kind of bucketing the funds. So you might have a portion of the money that is longer term. You might have some medium term stuff, and you might have, some less risky, kind of more stable liquid investments for those opportunities. And also that can work with, cash flow, if you need cash flow for your business or whatever it is. We usually bucket those funds kind of into different kind of risk tolerance areas. And then, you can kind of pre-plan for some of those things that might come up. But it's also in your portfolio, you're probably going to want a portion of it that's a little more stable anyway. So even if those business opportunities don't come up and you don't need the funds, it's always good to have a stabilizing factor in your investments as well.
Yes, that sounds wonderful. That in your financial plan, you're keeping it under your plan that if you need the money short term, this much money is kept aside for short term need.
Exactly.
This is for maybe you need it in 5, 7, 10 years, and this is something you might need it in your retirement.
Right.
So that brings a question to my head right now is that, is there any difference in the investment for the registered money and the non registered money? I mean, RRSPs versus TFSA, your corporate or money, if somebody has self-employed professionals and business owners, they do take out the income.
Yeah.
And when they take out the income personally, there is RRSPs that they can do to save tax on that side as well, on the personal side. And when you're investing that money, they are not taking that money immediately, because right now, why did they put it in RSP? Because they want to save tax now.
Yeah.
Definitely the money is for the retirement. So just maybe you want to share a little bit about the investment of that money. Is that a long term that you were talking about?
Yeah, so it's also going to depend where you are in your lifespan. So again, it will depend on the client, but yes, there are different types of investments that we might put in an RSP and a TFSA, in a non-registered investment account or a corporation. And a lot of that is going to be customized as to how much income you need from the investments and your overall tax situation, if you're still working, if you're in retirement, whatever it is. But if you don't need the income, sheltering some of those dividends or, companies that may be higher growth in the RSP or the TFSA because there's no tax, is usually helpful. So again, in that planning process, it all kind of comes back to the financial plan.
Yes.
We're going to look at your investments. We'll place, different kinds of companies in different types of accounts. And again, that's another kind of benefit of choosing an investment professional that can build you a custom portfolio. You're not stuck in a mutual fund kind of doing whatever that portfolio manager wants. It's a little more customized to your style, to your situation.
Wonderful. So having an investment advisor to build your investment portfolio is very important. But I have another question.
Yes.
And that question is that when you have that investment advisor, there is a fear in the mind that I'm paying a lot of money to that investment advisor. Is it true? What is the fee involved? Having someone monitor your investments. So what is an average that a client is paying for that? Because there is a cost to everything. Anything that you want professionally managed, there's a cost to it. But of course, what a professional can do, you can't do it yourself. I can't do it myself, something that you can do. So what do you say, a very general, what is the fee compensation attached to that?
Yeah, so there's a few different models out there. Most advisors these days are fee-based, so you will be paying a percentage of the portfolio annually. It does depend, I guess, on many different factors, but the size of the accounts. So I would say, on average, you're probably looking at somewhere from 1 to 1.5%. Again, those fees are tax deductible, so that does help, especially if it's in a corporation or a non-registered investment account. And those are usually all inclusive of everything. So you're not going to pay anything for financial planning on top of that, any of the advice that kind of goes along with those investment decisions. And then I think the fee-based model is very helpful for most people, because sometimes psychologically, when you've got a commission attached to every single transaction in the account, we might want to do something because it's opportunistic, or it's good for your tax situation, or you want to rebalance your portfolio. And sometimes if the client is paying for every single transaction, it can actually prevent them from sticking to that original investment plan, or moving back to the proper proportion if a company's gone way up, or if it's down and you want to buy more. It can stop some of that psychologically, and you're not getting the tax deduction if you're paying a commission for every transaction.
Absolutely. This is again a great way that fee paid to the advisor is a tax expense, tax deductible. You can expense it to your business. That's a wonderful thing. So that was wonderful knowledge. We need to have you again, because there's so many things we want to talk to you, Rosemary. This wasn't enough. But I really thank you. Thank you so much for coming here. This has been a very, very informative session and very helpful, not only for our audience, for me too. I learned a lot from you today.
Thank you so much for having me, Sim.
Thank you. This is wonderful. And if someone wants to connect with you directly, if you just want to tell, how can they do that?
Yeah, so you can get in touch with me always on the phone, or you can also catch me on LinkedIn. I do post lots of content, different kind of wealth management articles, so you can always find me there, or phone, email.
Wonderful. Yeah. And of course, I can always put you in touch with Rosemary. That's wonderful. So thanks again, Rosemary. That was wonderful, and I really, really thank you from the bottom of my heart to come here and share all your wisdom. And that was another episode of Simple Wealth Wisdom Podcast. Watch for us again next week with another guest. Until then, I'm Sim Gakkar. See you soon. Thank you.